Boom shakalaka. Today's video, I am joined by trading expert and chief technical analyst Bill Noble of Token Metrics. He is ex-Goldman Sachs, ex-Charles Schwab, and ex-Morgan Stanley, and now totally into crypto. Today's video, we are talking about exactly where the crypto bottom is, where the bounce is likely heading, and the best possible portfolio you could have going into the second half of 2021. So you'll definitely want to stay around until the end until we talk about that. If there is an issue with audio latency in this, I do apologize for that. The interview is phenomenal, so make sure you listen to the whole thing, and I will catch you guys later. Peace.
What's up, Bill? How are you doing?
Crypto love. Thanks for having me on the show. I'm doing all right.
Dude, it is so good to see you. I always love to have you here. And I know the ladies are going to be going wild because every time I have you on the channel, they literally go absolutely nuts. So before you break all of their hearts, is there a lady in your life right now?
Negative, Ghost Rider. Negative. The pattern is not full. So, you know, if there's a dating service running in the crypto love comment section on YouTube, feel free to let me know.
Dude, you would not believe how long like the Crypto Love Telegram channel that I had was just like these Indian dudes coming trying to get dates and whatever. They're like, I'm single, hook me up. but anyways, all right, on to some serious stuff. Ladies, you can contact Bill at billnoble@tokenmetrics.com or whatever it is.
No.
Anyways, Bill, what on earth is going on with the markets? Here's the reason. I'm confused. Okay. We see crypto crash 50%. Real estate untouched. Stocks untouched. What's going on?
All right. Crypto is the most sensitive market because it's the only free market. So at the moment where people, as in institutions, maybe got a little worried that the Fed was going to need to jam on the brakes, as in stop printing money. So, you know, a pizza from Domino's and a liter of soda isn't $50, right? You know, crypto felt the brunt of that up front because, again, there isn't this asset purchase program underneath crypto. Now, I also think that, you know, what happened to crypto is a function of the fact that everyone was like, well, you know, I'm never selling. I'm going to borrow money against my crypto. Dun, 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 dun. This happens in stocks all the time where margin people get wiped out. So that's when a 25% correction becomes a 50% correction.
Mm-hmm. Yeah, so definitely a lot of margin calls causing that. Now, I'm noticing personally that it seems like $30,000 we've bounced off of that area a few times. Do you think that we're starting to get kind of a foothold there, or is it going to be one of those crashes where we're like, oh, $6,500 is definitely the bottom, and then boom, goes down to $3,000? You know, one of those things.
Right. I remember that. I call that the knife experience. Yes.
Oh yeah.
Look, the difference between 30 now and 6 then is that you've got these guys like Michael Saylor below the market, right? And I know he just did a big purchase, but whoever sold it to him has to buy it all back, right? So how far below 30 do you think it's going to get? Plus, here's a very simple idea. In an inflationary environment, do you want to be short the hardest money in the world or not own the hardest money in the world down 50% when inflation is real?
Mm-hmm.
I think that's the real floor at 30.
Mm-hmm. Yeah, definitely. And I mean, even looking at a lot of the models, like the stock to flow model is touching the lower bound of it, similar to where it was back when it was $10,000 before it took off to $65,000. So we're seeing that type of stuff happen right now. So I guess, what are you seeing going on right now? Because you guys have a whole bunch of like stuff that you can look at. So what are you seeing going on right now?
Okay, good question. So in the beginning, our visual trends indicator, which is a combination of like moving averages, traditional finance math, and machine learning, It had a negative signal in Bitcoin around 50. It had a a negative signal in like a DeFi index, like, I don't know, midway through the move. So we're slowly watching to see if it can turn enough to turn those indicators positive again. The other thing we're keeping an eye on is options. Frequently when you have big moves like this around an options expiration that's coming up, it can create even more volatility. So without the finance lesson, that last heave where Bitcoin fell below 30K, that was not just panic, but it was panic coming from the options market. Now, you're out there going, oh, okay, dude, why does that matter? Well, because panic from the options market is temporary. When expiration's over, the panic is over. That's why I'm thinking, I don't know, 1850, 1900 ETH is going to be a hard floor, and 30 in BTC is going to hold.
Mm-hmm. Yeah, it's very exciting times, and it's also, we have this modern monetary theory where they're just like, we can just print as much of this money as, okay, so there's that on one hand, and then they can print as much money as they want, and yet we still have taxes. And then, like, horrible news, John McAfee apparently commits suicide because he wasn't paying his taxes. So on one hand, they're printing as much money as they can. On the other hand, we have people killing themselves because they don't want to pay taxes, when they're printing money, aside from just having power over you, there's no real need for taxes. So like, there's I guess in this era of, okay, here's my question. I know I'm throwing a lot at you. Here's my question. We've seen it happen to Zimbabwe and Venezuela and Weimar Germany, where they printed money very quickly and then the value of it went to zero. Where's the thought that this is going to be any different?
Exactly what I've been telling people. The black swan for 2022 is that you wind up with 20-something% inflation in the US. No one's talking about it. Everyone is trying to give you, oh, it's like transitory. It's like, oh, really? It's like a sprained ankle and it kind of heals itself. Well, economics doesn't work that way. Inflation is first and foremost a monetary phenomenon. That's why they keep guys around like me, walking, talking market museums, right? So if you got too much money floating around out there, and you got rich people willing to pay $50 for a pizza, or, 25 or 40 or 50% more than a house is worth, guess what? That's going to continue, and then you open up the economy, you have shortages, you have all kinds of other factors that can push prices. Now, does it turn into Venezuela? No, probably not. But can it persist? Are Americans used to not being able to buy groceries because they're too expensive? Where are they going to turn? Well, down 60%, I would say crypto. As far as McAfee goes, I would love it if there was like a 5-wave up move from, say, 30 to 70 or 80, and we could sort of almost name the final rally of maybe this cycle. After this dude, I know that he got in trouble and, he broke the law or whatever, but he was at least an outspoken critic, and he never, ever stopped being pro crypto.
Mm-hmm. Yeah, he never compromised. And he was the guy who got so many people into crypto. In 2017, he was literally the Michael Saylor of 2017. Like, he was the Michael Saylor before we had Michael Saylor. Everybody was like, yeah, McAfee says it's going to $1 million. He created McAfee antivirus. I'm buying it because it's going to $1 million. So yeah. And, he probably wasn't wrong, just by a few years. Yeah.
Right. Well, he wasn't wrong. What he was telling you is the world was going to need just what I'm calling now hard money. Right. Mm-hmm. Something that is good. It's good.
So
You don't know what the price is, but you know it's good as money.
yeah, so I think everybody watching is probably, we'll just say, balls deep in crypto. But so we're talking about this inflation going on, and this is going to be happening outside of crypto, but like there's a bunch of people who are just struggling to get by as it is right now, who are making minimum wage, struggling to get by as it is. If the price of stuff goes up 20%, how are they going to survive? You think minimum wage is just going to go up and then everybody's going to get more free money? I mean, how does it end?
Okay, here's the progression. And this is the question, I think. I think it starts with social unrest. We're already seeing it, right? I mean, my Apple news feed is filled with, president says gun violence is, unacceptable, right? So social unrest is next, right? Because if people can't pay their bills, then, that just normally in other countries, it leads to unrest. Then following unrest, I think UBI and dollar coin is what is going to be the 2022 trade at probably around this time. In other words, instead of unemployment, extended unemployment, food stamps, Medicare, etc., they're just going to issue dollar coin. They're going to mint it or print it. It's going to go into your wallet. It's going to be good for certain types of goods and services, right? So instead of like food stamps only being good for food but not diapers, dollar coin will get you the necessities that you need. And of course, once they start issuing dollar coin, what are people going to want to do with dollar coin other than buy necessities? They're going to want crypto, right? And I think even if that doesn't happen, the common man's going to figure out really quick, especially if Bitcoin and crypto turn, that they got to have a $200 or $300 or $400 of this in a PayPal account, or they're not going to be able to survive, right? They're going to see that the crypto goes up and helps them, as an investment, generate money and pay their bills.
Gotcha. So that being said, where basically there's just going to be massive inflation outside of crypto, what's the play in crypto for people who are in crypto? What's the smart play? Because Bitcoin there's a fixed supply. Cryptocurrencies, there's definitely not a fixed supply of them, but Bitcoin moves so slow, and there's Dogecoin and Shiba and Jeju Doge and this Doge and Elon Mars and everything. So like, what's the play?
Well, I had an idea, and I was wondering if it was NFTs. I was wondering if everyone was going to look at, say, securities or even things like Bitcoin and Ethereum and go, you know what? I like NFTs as investments. I like the NFT platforms. Everyone has given up this stuff for dead, yet everybody I know in art and music is calling me, asking me about NFTs. So the era of somebody paying $70 million for a YouTube video is obviously over. But somewhere in this NFT universe, whether it's like Rarible or Flow, I mean, if you look at what some of this stuff has been pounded down to, somewhere in NFTs is going to be a play. I also think somewhere in the world something is going to happen in the world of derivatives and trading, right? This kind of volatility breeds itself. God forbid 30K doesn't hold, or if 30K does hold and it turns around and goes to 100. I think, plays like Perp, or if DYDX ever issues a token, some of this stuff is just dirt cheap. So NFTs and derivatives.
And is there kind of a good kind of general portfolio allocation, or is it really going to be 100% dependent upon the individual? Like some people who just want to be totally, buy 100 different low caps and see what pops, and other people just be like, oh, I'm just being all Bitcoin and see what happens.
I think 100 different low caps and see what pops probably was yesterday's trade. I think the new way to do this is, you'll have your Bitcoin, you'll have your ETH, and then you'll say, all right, what's similar, but not exactly like these two. Like, for example, I think if you got Bitcoin, you got to own some Dash, right? It seems to be lost on everybody that this El Salvador news, they're the second country to really adopt crypto. Venezuela and Dash, right? Employees of US fast food restaurants are getting paid in Dash. So, if you have a little Bitcoin, you got to have a little bit of Dash. If you have a little bit of ETH, there's like the Cardano Solana crowd. Or, my boss Ian Bellina got famous with Matic Polygon. And then there are these outside the box plays like Helium, right? Basically you sharing your internet and having that device act as a miner for the Helium token, still undervalued. So Bitcoin and things like Bitcoin, ETH and things like ETH, one or two speculative DeFi plays, and then things like Helium and NFTs. That's how I would break it down.
Okay. Very good. Yeah. So I remember probably the last time we spoke was right around the peak, because I remember you saying that all your friends were calling you up saying like, how do I get into this DeFi? How do I get into these NFTs? And I saw the same thing too. I remember I went to this party. It was the week of the Dogecoin, or the week of Elon being on Saturday Night Live. And there were 6 other people in their 30s, and they were all balls deep in Dogecoin. And they were just like, I think I'm going to buy more Dogecoin. Oh my goodness, I think I need more Dogecoin. And I was like, I think it's going to crash tomorrow after this.
Yeah, I think, hang on. Sell. Yeah, exactly.
Yeah, and it just reminded me so much of like the peak in 2017 when I was out with some friends and they didn't even know the names of the coins. They were like, oh, I just sold my Ripples and I bought some Litcoin. And somebody at the party was like, oh, what's that doggy coin thing? I want that. So yeah.
Well, I mean, people definitely had a lampshade over their head. People definitely got over their skis. There was even a level of kind of, there was a lot of enthusiasm, semi FOMO going on at Bitcoin 2021 in Miami, right? I mean, there was 12,000 people at the conference, or for the conference, and 50,000 people descended on the city just for the conference. So that's a lot of crypto enthusiasm. Okay. But they washed all of that out, right? In other words, crypto, I think, is mature enough, I hope, to not have to go all the way up and then go down 90% before it can resume. The way this looks to me is crypto is a more mature market, but it's a free market, like commodities were in the 70s and 80s. Where you can just take the whole market and shake everyone out, or shake people out to the point where people who own it are underwater and wish they had capital so that if it turns, they can't participate anymore, right? The upside from here, I think, is the thing that, probably hurts the most people, even though I don't like to talk about it that way, right? I mean, if it turned and Bitcoin went to 100K, who's in crypto now has got the capital to participate in that versus just praying for what they have to come back.
Good point. Yeah. So I guess the other question I have right now. So I always like looking on token metrics. You taught me this one at the investor long-term ratings. And so like now we got some up there, like we got Polygon up there, got Filecoin up there, and Celsius Network up there. So any other like tricks and tips about using token metrics? And anybody who wants to check it out, there is a discounted link down in the description and in the pinned comment.
Yeah, I think the thing with token metrics is not just the ratings. Like, for example, when you see Polygon, Filecoin, and things like that, they may be in this environment offering hints of what could survive, even if there is another down trade, right? So it's like, what can you own and not get killed? I think the other thing that you just got to be watching is our visual trends indicator, right? You know, we have like a price prediction thing where we give you sort of like an analog pattern match, but then we've kind of kicked that up a notch. So if you're sitting at home and you're like, okay, I get the positive crypto message, but there's just no way I can jump back into this thing and get killed again, right? I can't catch the falling knife. I tried that in XYZ coin and look what happened, right? I bought the dip a month ago figuring, oh yeah, this is a no brainer. And, you know, my brains are all over my computer because it went down another 60%. Okay. The visual trends indicator is the way to go on token metrics right now, along with the rankings, because it is saving people money.
So that's located on the summary page. You scroll down a little bit, and then it tells you whether it's bullish or bearish. And
that's right.
How does someone use that? They just keep looking at it every day until it flicks bullish, and then they buy, and then when it goes bearish,
right. There's two ways to do it. So there's one that trades low frequency, so it won't give you as many signals. I think that's really good for market direction. If you want to trade off of it, it has something called high frequency, which is higher signals, which is more signals more of the time. Now, my tip and trick is, I think if you get a signal, say on low frequency, right? You'll get the signal, say it's going down, and then the market will go sideways. And then if it takes out that point where that signal occurred, or going the other way, right? Like here's the bullish signal here. And then it consolidates. And as soon as it takes that out, boom. So it's not only a signal-based device, but it's also this really nifty support and resistance tools. That's not in the fine print, but that's how I use it.
All right, cool. And so what would be like a recommended way of doing that? Just going through every coin, or would you say take a look at like the top rated coins and go through all the top rated coins, see which ones are going to pop? I'm just looking for some strategies.
Right. I would be following the stuff that's performing the best and that has the best reputation. So I'd be checking Bitcoin, Ethereum, Matic, Helium. Okay. We can check DeFi Pulse. Okay. So there are a couple of indices in there. So those are the 5 that I'd be checking every day. Then if you say you get, I don't know, a different signal from any one of those, then I think you can start checking the rest of the top market cap coins. You can start checking, your Cardanos and your Polkadots, right? Like Polkadot's unbelievable. At 50, it was the salvation of the world. At 15, no one wants it.
That's right. Usually the way it goes in crypto. When the price is all the way at the top, everybody wants it. When it's down at the bottom, nobody wants to buy it. And that's right. The toughest thing with trading is that, when nobody wants it, that's the time you got to buy it. And it's so counterintuitive.
Right. It is counterintuitive. And this pain trade has been, this has been epic. This to me, I was in college during the 87 crash, right? And in the 87 crash, here's how it unfolded. The market had been going up for 5 years, right? All the Wall Street traders were at the Hamptons over the summer counting their money. They walked in over after Labor Day and it started to slip. 30 days later, it went down 25% in one day, which, for crypto, that's kind of a lot. But for equities back then, it was the apocalypse. Like there are stories of dudes leaving work early and going out and buying beef jerky and gold bullion, thinking that the world was literally going to end. Now, what a lot of people don't know about the 87 crash, 2 things. First off, it went down, it went up, and there was a retest. Not just any retest, but a retest at Christmas, at the holiday season. So can you imagine the level of despair, like at the holidays where you're watching this thing retest the low of a world-ending crash? Now, when you have that kind of revulsion, that turned out to be a generational low. Like if you look at a long-term chart of stocks, you can't even find 87 on the chart. That's how much it went up. And the same thing could be happening in crypto. It went down. It popped up to 42. Everyone's like, everything's fine. Okay. The options guys all panicked and sold it below 30. It looked like the world was coming to an end. And now, just like 87, it's just like slowly making a comeback. And the next thing you know, wouldn't it be funny if we're on this show 6 months from now going, man, remember when everyone thought it was going to remember when they thought it was going to zero? This is the opposite of when we talked last time. Last time, everyone's got a lampshade on their head, partying, going, oh my God, I need to buy more Dogecoin. And now everyone's rage quitting crypto.
I love it when anybody rage quits anything. Oh my God. I saw this hilarious meme today. It was basically a bunch of like Romans on a battlefield, and there were a bunch of guys laying down dead on the ground. And there are two Roman guys, and one says to the other, he's like, how do we know if they're dead? And the other guy says, Dogecoin. And then you hear like, to the moon, to the moon, to the moon. And they go and stab those guys.
You know, the thing about Doge is that people don't realize that Doge is going to be a huge learning experience for anybody who got smoked in it, right? So anybody who does Doge, got smoked, and doesn't quit, this is what I'm telling those people. If you bought Doge and you lost money, you have something in common with the greatest traders in the world. You bought the top and you sold the bottom, because every single trader has done it, regardless of their status. So yeah, it's easy to make fun of Doge. Yes, guys like me in crypto should have known that as soon as that stuff appeared, that we should have been like, hold on, and we should have just been out, like just sell in May and go away. Like I talked about that. That's a catchphrase in equities. I talked about that all year on the Token Metrics live stream, right? And I kind of like backed away from it a little bit when ETH went to 4,000. Again, what happens when the guy that tells you to sell in May backs away? What should you do?
Yep. Yeah.
So it happened to us all.
Mm-hmm.
It did.
Yeah,
and you can make fun of the Dogecoin guys, but you know,
it was so hard to know that was the straw that would break the camel's back, so to speak, because there was a whole bunch of other stuff that was just like the shadiest stuff on earth going on, like these crazy, insane DeFi projects with absolutely absurd APYs and that would just pull the rug. There was ridiculous NFTs. So like, who is to say that a coin popularized by the richest guy on earth that would have done it, you know?
Well, I mean, you know, there's a lot you can say about this guy, but he wrecked the market, right? I mean, the market was going along and there were excesses, but you know, he basically came in and goes, he was like, watch this. And he just got on Twitter and wrecked it.
Mm-hmm.
You know, yeah. And I don't want to regulate against that. I mean, that's as old as the hill. You know, some guy trying to get on the tape and move it around, right? Mm-hmm. But, you know.
But I think now he's the most hated guy in crypto. I think now he's the most hated guy in crypto. Like nobody wants him back in crypto anymore, ever.
Right. And you'll know it's the bottom when he comes in and tries to say something negative and it goes up anyway. Like that's what I'm kind of hoping. Like that's the earth-shattering confirmation signal that it's over.
Mm-hmm. Yeah. Cool. So we've been going for quite a while, and I know people don't like to watch these things for too long. So what other stuff should people know while you're here? Because I know you're like a treasure trove of information. I literally fantasize about having these chats that we have. This is like, if somebody asks me like, what's your dream interview? I'm like, right here. This is it.
All right. Well, sir, it's always a pleasure to be on this show. Again, you know, if you're listening to this, you know, you stay with crypto love because, you know, there's quality and then there's the rest of YouTube, and quality is right here. You know, I think if there's a dream topic, it's about the future of money, which is your Bitcoins, your Dashes, your Litecoins, your Bitcoin Cashes, your Nanos, or some other thing, whether it's Doge or ETH or whatever, that the future of money survives the correction, right? In other words, everyone says it's inflation, but I think the thing that people need to start asking themselves is, have we arrived at the point where the future of money matters? And do I need to get on board? And if I had to leave you with a message, that's what I would leave you with. Stay with crypto love, take a look at token metrics, but remember, the future of money is here.
That's an awesome message. And it reminds me a lot about kind of the adoption of like Facebook. How, you know, it was in the beginning, it was just college kids, and then everybody started getting on board. No one wanted to be left behind. And I think we're getting to that point where everybody's heard of Bitcoin, and soon it'll be that point where nobody wants to be left behind. That's a great point. So, Bill, thank you so much. It's been a pleasure. I can't wait to hear how many ladies reach out to you, because, man, whew, it's good. They won't leave you alone. Especially you dressed up for today. I like that, man.
Well, yeah, that's I had to do the crypto love nice, you know, Miami shirt today. Yes,
it's wonderful. So awesome to see you. Can't wait to see you again. Love you, bud. Have a good one. Peace.
Thank you.